Welcome to Auxano Bytes. So today we have in conversation Mr. Saurav Chawla, who co-founded OkayGo along with Tejima. OkayGo is a job tech startup that matches businesses with millions of gig, part-time and full-time, blue and gray collared workers. Interestingly, they recently had successful exit in less than 3 years by getting acquired by Betterplace. Welcome, Saurav. Before I also introduce you to you. Saurav, before OkayGo, has his first stint of entrepreneurial journey with Fifth Avenue Cafe, a high growth F&B businesses focused on American desserts and coffee. For those in NCR, it's a 30-second milestone. I have had a chance to be there. It's very pet friendly. So I would say, don't miss to have as beautiful deserts, at Fifth Avenue and 32nd Milestone. Prior to Fifth Avenue, he was Vice President of Investment Banking M&A at Barclays in New York, where he led various deals worth billions of dollars. An MBA graduate from Kellogg's, he's also an award holder of 2 US patents for financial models built to prevent more than 200,000 foreclosures in the US during the subprime crisis. So from an IBanker to a restaurateur, still being a restaurateur, to a co-founding the gig economy and having an effective sale, your resume is over the last decade is embellished. So cheers to you, Saurav, and welcome to Auxano Bytes podcast.
Thank you, Brijesh, for this awesome introduction. I don't think I've been introduced in this amazing manner. So if someone else has to introduce me, I'll probably refer to this. Thank you so much.
Great, Saurav. So you have a very unique journey with OkayGo because you're solving a, I'll say problem in the informal sector with technology and with an international co-founder. Now help us understand the permutation combination of picking up problem statement and also choosing a co-founder for the same.
So the problem statement in my case was very organic. I was running a food business. After I moved back from the US to India, I was running Fifth Avenue, as you mentioned. And while running that food business, the problem was obvious. In the blue-collared sector, there were issue for people like me hiring high-quality blue-collar workforce. And I wanted to hire workers on a flexible manner because in a food business, you have seasonalities, peaks and troughs. So you have more people in the weekend, more people in the evening, but there was no technology service for me to hire these skilled workforce in the blue-collar sector on demand. So that is a problem statement. So very organically, while running the business, that came through to me. Regarding international co-founder, there was no plan like that, right? I was not expecting to start this in India, focused on India market, focused on blue-collar sector market with an international co-founder. It happened by chance. This also happened while running my food business. So when I was running the food business, my base kitchen and the base kitchen of Tom, who's the co-founder along with me at OkayGo, who's running his Sushi Junction, which is a sushi cloud delivery platform, was next to each other. And we met, I think, 5 or 6 years ago, just when I moved back from the US. And that organically, we got to know each other. Our backgrounds were like in the corporate sector. I was a banker. He was a consultant at McKinsey, and then started the food business. So we gelled. I think we just felt that we could do something together. I did not look at it like, oh, he's a Japanese, I'm an Indian, we are doing something in India. For me, it was, I like this guy. He's very ethical. Our visions are aligned. Our problems, we also understand the problem statement through running our businesses. And then I think we went for it. No real checklist or, this has to be met. But more importantly, the attitude, the work ethic, and the vision was aligned.
So you say serendipity played its role in
100%. Serendipity. I think I keep saying that co-founder and wife, these are the two most important partners you have to find in life, right? And most of them you cannot plan too much. You have to let life guide you. And they definitely serendipity meeting Tom, but I also did not want to rush into it. So he also evaluated how it would be doing business with me, and I also evaluated. So it was not as if, okay, we met and next, it took us, I think, 1 or 2 years after we met to start something. So we kind of tested the waters a little bit with each other. We want to make sure that this is the right person for me to invest those 4, 5, 6 years, 10 years. And then I think when we felt it was right, then we went for it.
Okay. So this is great. So serendipity, wife, founder, you're giving life lessons, right? Along with running a business. So you started the venture when the difference between the two terms, say India and Bharat, how, which we look into, were not as, established as they are now. You scale the tech businesses in the Bharat segment. What are some of the key learnings which can be applied across?
I think you have to understand, in my sector, for example, in the blue collar sector, so we are targeting the Bharat segment, the scale is humongous. You have to understand the drivers of the behaviors of the blue collar workforce. So our business is more worker oriented. We are focused mainly, firstly, on optimizing the earnings per hour of the workers. So we have to be very clear on who our target is. Who are we trying to cater to? For me, I'm trying to cater to the worker first, and the enterprise along with it. So it is worker first, and because if the workers are happy, their earnings are optimized, I'll be able to offer a better solution to the enterprises who are looking for gig workforce. So if the workers are happy, they'll stay longer at our organization, the attrition will be lower. So I think very important for us to make sure that to the right target and then building it from there. So very important for us that we focused, in our case, blue collar workers, the problems that they faced with lower earnings, with transparency of earning, with understanding the issue resolution. It should not have a higher TAT when we are having a lot of people on our platform. And that can be taken into account for a lot of other enterprises or organizations that are building it towards the blue collar workforce, especially.
What is one big thing? There are a lot of big things would have happened, but one good thing which in the initial 6 months of when OkayGo was formed gave you conviction that this is going to be big? Or it could be a chain of events, or it could be one event, but something which said yes. Yes.
In my case, actually, it was a little different. OkayGo was founded just before COVID. So end of 2019 is when we decided to venture into this journey. And just when our technology was ready, so we had kind of a product market fit, and we were the first version of the technology small and medium enterprises. Because I was running a small medium enterprise, I knew the problems in the F&B sector, the event management sector. So that was the first version of the product. But then COVID happened. So I wouldn't say in the first 6 months something unique happened with us because of a crazy event like COVID. It took us a little bit longer to make sure to understand and get that confidence that we are basically in the right path. Probably for us, it was more like 9 months and 12 months because of the COVID hiccup. After the COVID, we felt that the right sector for us, we pivoted because there was zero demand in the F&B event management sector. So we pivoted and realized that e-commerce and larger enterprises could even be a bigger sector for us to focus on. So we pivoted to focus on larger enterprises. And within that, we said, let's focus on the e-commerce logistics sector because we saw that scale and we built, towards that with this big event with COVID happening. That is when we realized that, okay, we are in the right path. So it probably took us 9 months, 12 months to identify that.
And if I understand correctly, both you and Tom do not have a tech background, right?
We are not techies in terms of we are not software developers in the traditional sense, but both of us, like for example, me, I was building financial models, data analytics models through software programs like SaaS. So I have some understanding of writing software codes, etc. But yeah, in a traditional sense, we are not techies.
And you build a tech platform going forward, the SaaS. Yeah. So how did this evolve?
I think both what we realized, and this is something that I probably did not realize before starting OkayGo, is that we are product-oriented founders. So we are very confident now of whatever we are going to do in the future is going to be easier for us to envision a product, develop a product, because we think like that. Even though our training is not there, but through this OkayGo journey, we realize this is our strength. So even though we are not software developers, we are almost like product managers. And we think like that. We think product first. So that really helped us in designing the product, in understanding and prioritizing different features and functionalities of the product. Execution, of course, was led by a technology team, which was very capable. But because our product division was very strong, we could have a decent outcome even without having a co-founder who's a techie, because we were very clear on what we wanted, what features we wanted, how should a product look like. So it was very clear when we were giving the functionalities and the requirements to the technology team.
So now, if you say, how has the diversity in your founding team helped OkayGo to scale up?
I think it's in terms of what Tom brings to the table is discipline, is long-term thinking, which is a very Japanese inherent quality to have. I think we as Indians sometimes are a little bit more short-term oriented, I feel. I think a lot of people in Japan, even now, they start to work at an organization and they retire at that organization. They're very long-term thinking, and also very disciplined in terms of work ethic, right? Like, for example, we Indians might get affected, and every day it might be a different kind of an attitude that we bring to the table sometimes. But with Japanese, I think in general, I feel that the work ethic every day, it's like, this is what we have to do and continue. So I think that rigor is something that he brought to the table that really rubbed off on me as well. I already had some of that rigor because I was an investment banker. So that kind of helped us make it or percolate that to our team as well. I think it's a good combination of Indian innovativeness and flexibility with Japanese rigor, discipline, and long-term thinking. So I think I keep saying the ideal society in the world will be a mix of Indian and Japanese, because they are bringing, I think, two very important aspects. I think just being like a Japanese society in the future is not the ideal state. Being very chaotic and short-term oriented is also not great. So I think a mixture of these two is the ideal state, which is hopefully we'll be able to achieve maybe in the next ventures that we do as well.
So this brings to one more cue, and that how do you handle the differences? Like, so you have a short term, and how do you, like you say, let's agree to disagree. That's good, but then that is one part of it. But then how do you handle the differences and ensure that the businesses, when you created on going on, how does that come in play?
I think we are very clear on who's handling what, where my strengths are. Given that we are playing in the Indian context, I'm probably better suited to handle sales and operations. Tom is probably better suited to handle finance and analytics, investor relations, right? So we kind of segregated our responsibilities very clearly. So even though both of us had inputs in what the other person was doing, at the end of the day, if it was something related to sales and operations, I had the final call after incorporating inputs from Tom, and similarly for the things that he was handling. The good thing is that our vision is aligned. How to reach that vision, everyone will have their own theories and strategies, right? But the long-term vision was aligned, and sometimes, of course, there were disagreements. But I think we were able to, through logic, not through force, able to convince each other. Because if you're logical and your long-term thinking or long-term goal is aligned, then I think you're able to convince your co-founder in what to do.
So we talked about, diversity, kind of founding. Then how did you go about building a team? Who will say, come, okay, so we have Saurav, we have got Tom, and it's a mixture of Indo-Japanese, so I don't know what I'm getting into. So how did the talent get into you and get the, the work at the ground done?
You're talking about how are we be able to attract the talent working with us, right?
Yes.
I think a couple of decisions that we took initially really helped us. The product manager was someone I knew from before. She was a friend when I was running like a small non-profit organization. 10 years ago, 15 years ago. She was part of that non-profit organization. Then after that, she had been working at a company called Nagaro for 10, 15 years. And first thing I did was I roped her in as a founding team member, as the product manager of this organizations. And because I knew her from before, it really helped us. We didn't really have to understand how the work ethic, etc. is. We started from step 2. Along with that, for the technology team, initially, rather than building the entire tech team internally, I again reached out to a friend of mine who was running an IT services company, who I knew from working before, who helped us build the MVP of the product. So the idea is not to do everything from scratch, to leverage your connections and networks that you have to build to a stage where you can start attracting and even affording that talent, the right talent that you need to build everything in-house. So that is how we went.
Very interesting. You said connecting the dots, and getting in touch with people or talent whom you knew from years ago, and you leverage on that.
Absolutely.
So one more thing, so you're addressing a supply-demand mismatch for blue-collar workers and the jobs. How do you develop the business from both supply and demand side?
Sure. I think for a supply side, we are using different avenues to get the workers on our platform. It's a technology-driven solution. So we want people to be active on our mobile application to look at different multiple blue-collar gig opportunities. To do that, we have leveraged social media channels, especially Facebook was really helpful for us to reach out to the right blue-collar workforce. Apart from that, we were, doing a little bit of an organic reach out through people on the field. So combination of these two really helped us to get the right supply on our platform. Challenge, I think, is not only getting the right supply, but to get the supply to sustain on your platform. A lot of people are able to, in a short term, do paid marketing, etc., to get people on the platform, but it's hard to sustain. So we have built processes to make sure that once the worker comes on the platform, they stay, which is defined by the earnings that they get, the issues that are resolved for them. So we are thinking worker first. So they feel a little bit more loyal to our platform because we are caring for them. On the demand side, we got a great opportunity to get incubated within Flipkart. Flipkart itself had demand of like 10,000 workers, gig workers, when we started. So we didn't really have to set up a sales team. In fact, till the time we got acquired, we had no sales team. Basically, It was me who was reaching out to some, because we are focusing on larger enterprises. And with the other enterprises, you need to have some connections at the senior level. And the demand was there for us. So demand was easier for us to get, at least for stage 1. When we go to the stage 2 now, along with Betterplace, we leverage the sales team that we have built to go to the next level.
So what would be your advice to, let's say the startups in this space and who would want to, grow, having a similar business model?
I think the idea is to, so what I've realized, and that was one of the decisions that prompted us to be okay with getting acquired by Betterplace. So essentially, just so that we, the background, at the time when Betterplace acquired us, we were in the market to raise another round of funding. We got that term sheet from a VC, and we had another term sheet from Betterplace to, we had to have basically both opportunities to build organically as well as to get acquired. My hypothesis is, in the blue-collar sector in countries like India, Southeast Asia, the thing that might succeed is a horizontal play versus a vertical play. So if someone is probably targeting, fintech solutions in the blue-collar sector, or just workforce fulfillment solutions in the blue-collar sector, or skilling solutions in the blue-collar sector, in these markets, it's very hard to scale and be profitable vertically. From my experience, I realized, because once you have a touch point with a worker, you should probably try to offer horizontal solutions to that worker to make sure your lifetime value is higher, because there could be, the cost of acquisition might be tougher for just to sustain the person for only one solution. That is why I felt that it's better for us to, be a part of this horizontal solution that Betterplace is building. So I would say horizontal play in this sector is probably, at least my hypothesis, is better than the vertical play. We have seen some vertical plays not being successful in this sector.
For the audience who doesn't know about the horizontal and vertical play, if you can just give an illustration by what exactly does these two mean?
Sure, sure. So vertical play would be you identify for the same segment, you identify, as I mentioned, like a fintech play. For example, you're only trying to provide loans or early salary, early wage access, etc., to blue collar sector. Horizontal play is you're offering end-to-end products from getting job opportunities to providing skilling opportunities to providing fintech opportunities uh, for those blue collar workers. So that is the difference.
So to start with, OkayGo started as a gig recruitment services and then transformed into a SaaS solution. Is that correct?
So I would say it's a service, it's a SaaS solution more than a recruitment solution. We are trying. So what we are saying is we are not only providing workforce to you. We are providing the platform to manage that workforce for you. So essentially, sourcing workforce is one part of it. But then managing that workforce, making sure the attrition is low, making sure they're getting other opportunities, making sure they're getting early salary and transparency of earnings, that is the layer that we have built through technology. So it's through that platform we're offering you that solution, of which the workforce, supply of workforce is one part of it.
So when you pivoted, so did you have a playbook or the playbook happened, as you are learning on the job?
Learning on the job. There is no, we did not, so COVID is a once in a lifetime event, right? We had no idea that this will happen. But the good thing was we were committed to the sector. We felt that there is definitely space. The good thing is in the blue collar sector is the market size is huge. But the bad thing is a lot of startups have failed in the sector. But we knew that is not something that we'll get too influenced by. We will stick to the sector. We'll find out a way to achieve success in the sector. And that is, I think, helped us be flexible. So we saw that one opportunity die completely. And because we were having conversation with so many other players in the sector, and we were open to, experimenting new things, we were able to find another opportunity quickly.
So the other part, when you are raising money in the first place, you are first bootstrapped and then you raised money, or you raised money as you were building the business right from day zero?
We did raise money right from day zero, but we were very disciplined in the money that we were raising. So in the entire lifetime before this acquisition, we only raised $500,000 over 2 years. So very disciplined in the way we were raising money, the way we were running the business, thinking about unit economics. It was only when we were looking at this round, which should have been a $2 to $3 million round, when we felt that the product market fit was there, we had achieved some success. We really were out there in the market and got the term sheet for a little bit larger amount as well.
So why unit economics right from day zero when you felt when you knew that growth is the only option?
So growth without product market fit is, it's something I think it has to be balanced. If you grow and you have no idea where your unit economics are going to land, that is a little tricky for at least for Tom and me to digest the way we thought about it. So it was not that we didn't want to grow, but before the growth, we wanted to make sure that our product market fit and some sort of unit economics is in place, rather than just growing for the sake of growing. Because we knew that in this sector, there are big issues with the lifetime value, the attrition. So we wanted to solve for those issues before we, press on the accelerator.
Okay. And on a hindsight, if you were to, grow OkayGo, how will you do the same thing, or you think you'll make some changes in the approach?
So, by the way, we are still part of OkayGo. We are still growing. So essentially, we did 0 to 10, 10 to 100. It will happen in the next 2 years, 1 or 2 years. We are working with Betterplace right now. We are not going anywhere. So the idea is to scale this up to 10x of what we are right now in the next 1.5 years. But if I had to change something while it's hard, it's hard for me to answer that because it was because I felt we were pretty flexible in what we did in the past. But of course, there is room for improvement. Probably find the right. I think we did struggle with finding the right talent after we had built the first layer. So we did, as I mentioned, we did get the right product manager. We did get a right technology lead. But some of our hires, we could have been a little bit more disciplined. There was a little bit of a pressure that we put on ourselves to expand the team, scale the team, and we did end up hiring senior people that were not the right fit for us. Did not have the right startup mindset, the rigor mindset that you're supposed to have as a leader of the organization. So we did end up hiring a few people who we had to let go. But I guess if there was a little bit more rigor and a little bit more threshold that we had kept for ourselves, we would have probably done that better.
I think this is a common thread which I hear from founders on the talent side and the rigor side. Earlier we spoke about having how the Indian and the Japanese mentality helps, and taking that into account, you got acquired in less than 3 years.
Yeah.
So and what I understand from what you have shared now is that you had no such intention to start with or to begin with, but
Yeah.
it just happened.
Yeah.
So how open you were, Zeki, this was the right time to get acquired, and how did you come to that decision?
It was not an easy decision. We had sleepless nights deciding what to do. We had both opportunities. Sometimes it's actually trickier if you have both opportunities, right? If you only have one opportunity, it's easier to take that plunge. But we had both opportunities on the table. We had a little different, Tom and I had a little different, thought processes there. But we were able to convince each other on the part that this was the right process. Because I felt with my experience in this sector, as I mentioned, a horizontal play, we would have built a horizontal play as well. We were building that horizontal play with some fintech capabilities apart from the gig workforce management capabilities, and we would have kept on building it. We realized that those capabilities to a certain extent have already been built by this organization, which is a good organization. We like the founders. It took us 4 or 5 months after we started interacting with the founders to make that decision. And we also wanted to make sure that our investors are getting a great return. And we are putting our team in the right place. Team should grow. It should not only be our proceeds or investor proceeds. The team should be happy. Team should have the growth. They should have the stability. After evaluating those things, we felt we took the right decision. But to be honest, we will never know. We will never know if we should have taken the other path or this path. It was in that circumstance. I think it was not like one part felt like, oh, this is 90% right, the other one is 10% right. It was like 60-40. It was like a very close decision for us because we were so early in our journey. Maybe the next time we do something, it might be different. But this sector, and at that time, I felt the thesis that the horizontal play is going to be a better play here.
So you took a decision based on the available data points, and then use that data points to execute, what you, I should say, felt to do.
Yeah, absolutely.
One more, so like say that one of the things is that, like serial entrepreneurs come and say, I created value and someone else will run it. What are your thoughts on this? Because I don't know if you have this thought I was struck.
So the good thing is in this acquisition, we are the ones who are still running it. We are running the gig vertical within Betterplace. There is no other team in Betterplace who was running gig. This is new to them. It's not like that they have acquired this and some other team will run it. We are supposed to run it because we know this. It's a new thing. Gig is anyways a new thing. It's not been there in a formalized manner. It's been there only for 3, 4, 5 years. We are one of the first few companies to play in this sector. So we are evolving this, we are growing this, and Betterplace has given us this responsibility. So great thing is I not only get to see the 0 to 10 journey, 10 to 100 journey as well, and we are all invested in it. So essentially, if we grow, if OkayGo grows, our team grows, and that is the structure that we have kept. It's like the upside. We have the upside as well, because it's not only a cash deal; it's a cash and stock deal. We have, if Betterplace as an organization grows and Betterplace is placing a lot of faith in us, so it's a win-win for everyone.
Great. It looks like the joining of forces is really going to make you even bigger and better.
That's the intent, hopefully.
One last question, one I'll say in the like one unfiltered piece of advice you have received in your career, which has changed your perspective or has given you direction which you never thought of.
That's a tough one. I very recently I'm reading this book called Amp It Up. It's by this serial CEO. I think data domain, Snowflake now, he's the CEO. Snowflake is probably multi-billion-dollar market cap company growing at like 200% revenue, crazy growth. And in that book, he says that a lot of people put a lot of weight on strategy, and very few people put that amount of weight in execution. What I've realized is execution is greater than strategy. You can keep making strategies, but if you're not able to execute them, it becomes very hard to succeed in anything you're doing. So that discipline and execution might be boring. It might sound less interesting or intellectually stimulating, but if you're able to crack execution, a medium level strategy can give you great results. But if you have a great strategy and execution is very poor, then I think you're just out. So that is something that I recently reinforced after I read this book, and that is something that I'm trying to put in what I'm doing right now, because my journey is from 10 to 100 right now, and it is a lot of it dependent on the right execution.
We resonate with that. As VCs, when we invest with entrepreneurs and companies, we are betting on the execution, by you. So yeah, absolutely, bang on. And again, it reinforces, and that helps. Yes, great. Anything on a closing note you want to add, talk, share, which we would not have touched upon, which you feel can bring more value?
I think what I would probably, if there are entrepreneurs watching this, what I will tell them is, take that leap of faith. If you feel that you have the right goal in mind, you have the right problem, or you want to solve a particular problem, don't try to manage with a lot of people try to do too many things at the same time, right? What I've realized is they have a full-time job, cushy job. They want to be entrepreneurs, but they will not leave that job until they see that something is happening in something that they're experimenting with in the entrepreneur side. That is very hard to do. My advice is, yes, there is a little bit of a risk, actually a lot of risk, but you're really minimizing your chances of success if you're not completely dedicated to what you're trying to do. So be all in if you really want to improve your chances of success in a hard field to succeed.
So fantastic. So you're saying stepneys were in the car. In real life, there are no stepneys, right? There's only one plan. So great, Saurav, if I can say, a dream, you dreamed, you and Tom dreamed, you started, you did, you grew, and you exited, and still continuing to follow that path. So which is, I would say, if I'm a romantic, I would say it's very beautiful space to be in. I'm pretty sure, it's not as romantic as it sounds today. You must have had lots of sleepless nights, 2 years ago when you just started and you had to continue to have that faith. But it brings about the resilience which we talk about in the founders, when you're initiating or doing a thing. For this space which we are in and for the entrepreneurial journey, in India, at least for the next 10, 15 years, we see a huge, space where, there can be value add by you and your brethren who can actually think about and bring something which is not there. So thank you, Saurav, for your time, for sharing your insights on the journey. very interesting, wherein you have, did, if you say end to end, which people who, or the founders who want to start something, want also to exit. So you have done everything in a short period of time, and pretty happy, very happy to know that, and for you to sharing the journey and also sharing your inputs very openly with all the founders and prospects who want to be in this part of journey. Thank you, Saurav.
Thank you so much for hosting me. It was a pleasure. Thanks.
Thank you.